Stock market holders, today we find out there could be only a few hours before the stock market totally flips. We're going to talk about SpaceX and how it's kind of ruining the stock market for retail. We'll just talk about that. Plus, what's happening with Micron and Nvidia and AMD and Sofi stock, and lots to talk about there as well. All I ask from you is that you give me a beautiful smile to send out those good vibes. Smishity smash that like button and let's get into it. Please read the disclaimer. So right now the stock market is laying a little bit low because of the Fed meeting that is happening today. Right now you can see the S&P 500 is up a little bit this morning, but we will find out towards the end of the trading day. After yesterday we saw the Nasdaq pull back almost 2%, how the market is going to react to the Fed decision and the Fed speech. Well, I'll explain why this is so important for the stock market. Right now, we have an interesting situation where retail investors poured nearly as much money into SpaceX over the last two sessions as they did into all other stocks combined the prior week. So retail is pushing so much right now into SpaceX, and this could be a recipe for disaster, right? It doesn't mean that it's going to be a disaster, but this could be a recipe to disaster because all the money right now is in the new buying is concentrating on one stock. And that could be, again, whenever something like this happens, it could be a problem. Moreover, we know that the US stock market is rewriting every record in financial history books. The top 10 US stocks have now combined market cap of 25.3 trillion. If the top 10 were a stock market, they would be the second largest in the world, even exceeding China. The top 10 US stock market value is also larger than China's GDP of 19.4 trillion, the world's second largest economy, and together these companies are now worth 80% of the US GDP. Furthermore, the top 5 companies alone have combined market cap of 18.6 trillion, exceeding the value of every global stock market outside the US. This is truly unprecedented numbers. And when you have such a big concentration of wealth, of value in a few stocks, theoretically, this could be a problem. Okay. Same way if you have like a country that has a few big companies that fuel it, and then one of the companies or two of the companies suddenly have problems, that country is in a deep issue, right? That's why it's important diversification, not having all your eggs in the same basket. Same way investing is. That's the same way for it should be the stock market, right? Of course, there's always going to be some big stocks, but this kind of concentration in the top 10 is historically, a history, right? It's a big thing, right? We've never seen something like this before. And so this is why today could be so important. Now, right now, SpaceX, had that big pop up to 225 and then ended up pulling back, ended up 4.83% on the day. But we saw AMD drop 7.3%. We saw Nvidia drop 2.3%. Micron dropped 6%. SanDisk dropped 6%. A lot of these stocks that were, on amazing runs. Marvel dropped 10%. SoFi was the only one really that had some juice there, 3.3%. We also got news that their CEO just bought another $250,000 of stock at $18 per share, and he's now purchased 2.3 million worth of shares in 2026 across 5 separate buys. So that's an interesting update there from SoFi stock. Palantir down also about 1%. It was actually down around 4 or 5%, but popped up there towards the end of the day. Even Apple still under 300 after going over, pulled back. Microsoft down 0.5%. Meta actually up yesterday. Interesting. Robinhood. So some stocks were down, but the ones that got hurt big were the chip stocks, the AI infrastructure related stocks got hit yesterday the most. And so it will be very interesting to see what happens here and how this potentially plays out. Now, we're going to get the first decision from the new Fed chairman. Okay. It happens at 2 p.m. Eastern time. So this is what we really need to know about what's happening. Now, again, I don't know what he's going to say. I don't know how this is going to play out. As always, this video is for educational purposes, for entertainment purposes only, not financial advice. Always do your own due diligence before you decide to invest. People are kind of criticizing the fact that I use kind of the titles of saying, oh, 24 hours or this is happening and that is happening. Yes, when you have a channel that makes videos every single day about what's going on in the markets, every single day like this is important. Why? Because you don't know what is going to be the trigger that sends the market up significantly or down significantly. I've been in the markets for a long time, and I know that one thing, one headline can send the markets down 5%, 10%. It's happened. I've been through the pandemic. I've been through, tariffs. I've been through, even before that, there was the US China kind of trade wars. And before that, there was the Greek debt crisis. And there's always something that is sending the markets on a tailwind. You don't know what it is. Remember, 2 Fridays ago, we had bad. It was strong labor market data. And then the market dropped. NASDAQ dropped 4%, and individual stocks were dropping 10, 15%. You don't know what is going to be the thing that sends the market off, positive or negative. And that's why 24 hours, yes, something's happening. The new Fed chairman speaking today is very, very important for the markets. Okay. Okay. I vented. So today's FOMC meeting is a major milestone for markets. Right now, we see that there's overwhelming pricing in rate holds currently at 3.5 to 375 range. The probability is around 97% that that happens. Because the hold itself is potentially a done deal, the asset price movement will entirely be driven by the forward guidance and the summary of economic projections, the dot plot. So here's what we need to watch out for. Let me put myself to the other side. The dot plot. Since the projection meeting, the Fed will release an update dot plot showing where the policymakers expect rates to sit by the end of the year. In March, the dot plots implied one more cut for 2026. However, with inflation stubbornly sitting at a 3-year high, driven heavily by recent energy shocks, you need to look whether the median dot shift to zero cuts or even hints a rate hike by December. This could be interesting. But with oil dropping down to 74.5 range and potentially dropping even lower over the next coming weeks, and potentially the Fed projecting this, that is also going to affect what the dot plot gives us, because they might be projecting more than one interest rate reduction according to what happens with oil, and then how that could affect the PCI, the PPI, and the PCE data. The worst tone, is he going to be hawkish or dovish? As brand new chair stepping into hot inflation, Kevin Warsh needs to establish his credibility. Market wants to see if he leans aggressive, hawkish, to stomp out inflation, or if he tries to protect the labor market, dovish. Look closely at the easing bias. Will they completely remove language from the statement that hints at future cuts? And data dependence. Watch how heavily he emphasized incoming data versus fixed timelines. If he sunsets predictable forward guidance, uncertainty will spike. And so this is the potential here. We have a statement removes all cut bias, dot plot signals zero cuts or potential hike. War sounds aggressively strict on inflation. Risk off, DXY US dollar index spikes, bond yields higher, stock market could drop. The mid kind of the steady hand expected. Rate is held steady. Dot plot retains a slight hope for one late 2026 cut. Warsh remains highly data dependent and neutral. Choppy then flat. Relief that things aren't worse, but no fuel for a massive rally. And the dovish surprise. Dot plot firmly maintains 1 to 2 cuts. Warsh acknowledges a strong labor market, but expresses deep confidence that inflation will cool soon. So this is like the most optimistic scenario. And then we have a risk on rally, dollar softens, liquidity flows back into equities. And then we could potentially see the stocks that, are riskier get a little bit of momentum. The stocks that have run already a significant amount and our retail darlings could get some more liquidity. Maybe even stocks that were, bashed down over the past few months or didn't participate in the rally, maybe investors will look at that as an opportunity on those. So we'll know a little bit more once we are post Fed meeting. I will, of course, update you on what's happening. So make sure to put on notifications. If you are subscribed, A lot of you are watching the videos right now and you're not subscribed. So if you want some more stock market updates daily, make sure to subscribe to the channel. Thank you for watching. I hope to see you next time. And like I always say, let's make a lot of money.